Hello and welcome to today's Lux Research webinar, How to Avoid a Climate Tech Disaster. My name is Kevin C. I'm a VP and Group Director here at Lux, and I'm joined by my colleague Yunsheng Yu, who leads our energy and climate tech research. And today we're going to be having a conversation about climate tech, but before we jump in, a few logistical notes to take care of. One is throughout the webinar, you can type any questions you have in the question box on your screen. We'll try to get to as many of them as possible, but if we don't, we'll follow through with you after the webinar. And at that point, I'd like to jump in. And to start, I'd like to give us ourselves a little bit of an introduction, just so you get a sense of the different perspectives that we'll be covering in this discussion. First, myself, I started in this industry actually deep in what was then the clean tech movement, which we'll get into, covering batteries and electric vehicles, everything from materials to the cars themselves, looking at adoption, looking at innovations that could unlock possibilities there. But I've since moved on, and climate tech is a portion of what I think about, but not what I do full time. But that's why we have Yunsheng here, who spends really 24/7 thinking about climate tech, leading our research there, everything from hydrogen to carbon capture and a variety of different technologies and applications. So we're going to balance the discussion with our two perspectives and proceed from there. So to jump right into the agenda, or what we hope to cover today, three main things. The first thing is, what is climate tech? How do we define it? How do we differentiate it perhaps from clean tech, which is one of the points we would like to make. The second is the hype appropriate? Is the amount of hope here appropriate? What is the real scenarios that we should expect, separate of the marketing and separate of the conversation going on around it? And the final portion is, why now? What makes this push different? What makes this push more or less likely to succeed? And with that, we're going to attack the first question, which is, what is climate tech? And I'm going to throw that to my colleague here. So what is, from your perspective, the definition of climate tech?
Yeah, absolutely. I think the term's getting used more and more often now, and unfortunately, it's being used interchangeably sometimes with clean tech. And I think both cover similar things. There's some overlap. However, I think climate tech is more specific and more targeted. And you can see some of the two definitions here on the screen from Clean Energy Ventures and PwC. And you'll see how it really focuses on not just decarbonization, but really eliminating or mitigating greenhouse gas emissions. So from Lux's perspective, we probably take that one step deeper. And to us, climate tech is anything that can eliminate or completely remove greenhouse gas emissions from the current energy system or ecosystem as a whole. I think that's where climate tech really shines and stands out.
Yeah, and that leads me to the next thing we wanted to discuss in the context of climate tech, which is, how do we compare and contrast this with clean tech? And as I mentioned in the intro, this is where I spent much of my time, and there was a tremendous amount of hype here. And what you're looking at is a study that came out of MIT that basically showed that clean tech investments did not have a very good ROI compared to investments in things like medical technology and especially software. And I think there's a lot to be learned here, and I'm interested in your perspective on the differences. And what I see is there's a number of things happening around us in terms of the environment from a corporate perspective, for example, that are different. But I think many of us who spend time in this industry are a little bit scarred. So how do you view the differences between what's happening now with what's happening, say, 10 years ago?
Yeah, I think there's a few differences happening, but before I jump into that, I think this is not surprising. I think it was very clear and that the venture capital model just doesn't work for clean tech, and that's kind of the title of the MIT paper shown on the screen. It's a long commercialization timeline. It's a hard industry and market to get into. There's a lot more nuance there versus, say, a software. But I think what's really different now from 10, 15 years ago is the amount of top-down support and enthusiasm around decarbonization, right? I mean, there was some momentum around mitigating emissions and reducing CO2 emissions back around 2008, 2009. But I want to say that kind of momentum is a lot stronger this time around. You have almost every single major global economy pledging to become net zero by 2050. That's a definite all-time first. And a lot of that just really builds on the Paris Agreement that happened in 2015. And I think that's the major difference this time. It doesn't change how the technologies work. It doesn't change how you have to invest in it. But I think it does change sort of the environment that these technologies and startups are now coming into the market in.
Yeah. And just as we move on, I think the caveat here is that just because the conditions are different doesn't mean there's not a lot of risk associated with it. And I think the incredible momentum behind climate tech and from a SPAC perspective, which is not something I thought we'd be talking about if you asked me a year ago. A lot of money flowing into companies, frankly, with unproven technologies, even unproven market demand, frankly. And so, I view this with a load of caution, given my experience looking at a lot of how pure play EV players a decade ago kind of fizzled out, really, besides Tesla. But do you see anything interesting here from a SPAC perspective? Is it all kind of smoke and mirrors, or what's your perspective on this?
It's definitely a lot of smoke and mirrors, but actually, I want to turn it to you. If I showed up to the Lux office in 2010 and showed you this figure, what would you say?
Yeah, I think I'd first ask what the hell is a SPAC, and then once you educated me on that, I would say this doesn't smell much different than overhyped things that we saw a decade ago. And so for all the conditions which might make climate tech more of a reality than clean tech was, these capital intensive investments in unproven technologies are a huge risk. And that's the part that, I would caution people who are investing their money to really be thinking twice about the reality of the technology behind these things.
Yeah, and I think that's kind of where I stand on that too. This was great. It was a great 12, 18-month run. Everyone gets hot once in a while. Teams don't lose. You go on a hot winning streak. And this is kind of climate tech's moment. This is the winning streak, and no matter how much you put in, you're always going to come out a winner. But things always correct, and there will be a lot of investors who are going to get burned, and it's inevitable. But I think this is good. I think SPAC brings more common sort of layman attention to climate tech. I think that's also really different from 10 years ago, where clean tech sort of was a sort of ecosystem in itself, where everyone knew about clean tech, all kind of function within it. Now you have average Joes and folks talking about climate tech who probably never ever thought about buying an EV or ever thought about investing in a fuel cell company. I think that's great. I think it's exciting, but it's also a cautionary tale that we all have seen too often as well.
Absolutely. And I think this early part of the conversation gives us a perspective on the dynamics that are happening around climate tech. I think what everybody's interested in beyond that, just the macro, is what technologies we're excited about and what technologies are really worth investing in from a community perspective. And so what we're looking at is a screenshot from Bill Gates' book, which was also the inspiration for the title of this webinar. And this is a screenshot from the book that was part of the conversation Bill Gates had on 60 Minutes, where he listed the technologies, varying levels of specificity here. What was your reaction to, when you see something like this in light of the things that we've been covering and that you've been looking at day to day?
Yeah, and I think, like you said, it's a really varied level of detail. I mean, there's some really broad things. Saying zero carbon and just putting a word next to it really isn't a technology. It just kind of says you want to go to zero carbon. But then there's really specific things like next generation nuclear, geothermal energy, etc. I think what it represents and shows is that there's a broad spectrum in climate tech. You have some very early stage lab scale technologies, and you have technologies that are already in the market They just need to kind of scale and gain more traction. I think that kind of sums up how big this challenge is, but also sums up how exciting climate tech is, because you can be making a lot of seed round investments. But I wouldn't be surprised if we see some late stage multi-billion-dollar rounds coming into the climate tech space later this year or next year as well. And I think that's kind of the dynamics that we're seeing. And all these technology guys on this page, I have some favorites and I have some that I'm not too fond of either, but I think that's kind of where we are now. We really don't know what the solutions are at this point.
Right. And I think, just from my history and spending some time here, I think we know batteries are taking off in electric vehicles. The scale is coming. To that point, we were conservative on it, and rightfully so. But now we're kind of a little bit over the hump, and you're starting to see that adoption. But I think the one on here that's obviously a cousin to that is grid scale electricity storage, and in particular something like long duration storage, which could have immense benefits as we deploy more renewables, kind of mitigating a lot of the problems that come alongside that. It makes that, a lot of this comes down to economics ultimately, it's performance versus cost. So those obstacles remain in practically all these cases. But in terms of the value of these technologies, something like long duration storage, the scientist in me loves the idea of something like CO2 to concrete, where there's kind of an obvious link between utilizing CO2 that obviously we don't want in the atmosphere to actually make something useful. So that kind of technology certainly appeals to me as well. Again, economics are a big portion of the obstacle here, but
make something useful that isn't just combusted immediately to be re-released into the atmosphere.
Exactly. Right. Exactly. So lots of these technologies are things that we talk about all the time. We have whole webinars, for example, on plastic recycling. But I think we're going to move on here and play a little bit of a game where we react to some recent climate tech headlines or climate tech events. And I think we'll take turns here. So the first one's for you, and it's around Bill Gates, not surprisingly.
Yeah. Obviously, I'm sure everyone who's dialed into this is really familiar with Breakthrough Energy Ventures, but I love it. Thumbs up on this. He's clearly become, the climate tech Pied Piper. Wherever he goes, the masses follow. But in his case, wherever his money goes from BEV, you see a lot of follow-up rounds coming afterwards as well. And again, they actually have the right mentality. They in their website, they have a patient capital strategy. They're looking at 15 and 20-year investment timelines, which is drastically different from a lot of other venture capitalists out there. But $1 billion at the end of the day is still $1 billion. But I think it's important to note that once you spread that around 40 to 50 startups, it's really not much. You probably can get something to pilot scale. But big thumbs up from my end on this one.
Great. And if we jump to the next one, this is a tweet out of Sequoia, obviously a really well-known venture capital firm, saying that we're actively investing in climate tech and sustainability, so on and so forth. And to me, this is an example of a broader push from, and Bill Gates, for example, is another case of this, where very, very successful and very smart people in certain realms have attached themselves to the climate tech movement because perhaps admirably, they want to solve some of the world's biggest challenges. I think when I see something like this, I approach it with caution, to the extent that if you think about how a firm like Sequoia really showed its success, which is obviously quite impressive, a lot of it's on the back of more traditional software companies, SaaS, things like this. And when you get into the scale of investments that a firm like that has, there's a playbook. There's a methodology that works for the target areas they're interested in, and to some extent, it's rinse and repeat. So if you're looking at optimizing a SaaS company, or even just evaluating one, of course, you have to look at the potential stickiness and have imagination for it. But then there's a lot of tried and true principles, optimizing the sales force, streamlining product development, user personas, and really measuring uptake in different ways. So there's a lot of tried and true methods. And I guess the reason for caution here is that I just don't think those playbooks necessarily work for climate tech. You're talking about a different audience. You're talking about a different scale. You're talking about a much different timeline for ROI. And so, there's no doubt that people can come into this space and be successful, but I do think generally it hinges on them putting the right people around them with experience, with the timelines, with the technology challenges, with the business development challenges that come along with something like climate tech. So that's why I approach some of these things with caution, that it's, a track record of success one place doesn't always mean the same thing in a space like this.
Yeah, and I think the point about the playbook's correct, right? Like, if we took BEV Ventures portfolio and ran it through Sequoia's model and playbook, none of those startups would emerge as a investment opportunity. And this tweet was from last January, and they're saying they're actively investing. Last time I checked, they've invested in one startup that's climate tech related, and it's a mobile app about how to track your own carbon footprint, which definitely fits the model they're used to, right? It came out of the playbook, and I think that's kind of where things are going to get really difficult for these more traditional VC firms to get in this space, because it's a different monster. That's not to say what they do is easy. It's just very different. And I think that's something that I agree with you. A lot of caution needs to be taken.
All right. So I'll serve you up the next one, which is about BlackRock and Tencent partnering to invest a large sum of money in decarbonization. So I know, naively, without even thinking about the details of this, this is market moving in the sense that BlackRock literally moves markets. So for them to show a commitment here is meaningful. But what's your take on how meaningful this is from a scale perspective, from a partnership perspective?
I think this is a big deal. Temasek, BlackRock, like you said, they are real market movers, and their primary business model is to make as a lot of money as possible from their investments. But they also have now, prioritized decarbonization startups, technologies, and companies. I think it's a really big deal, because now it's sort of these bigger players, one is the Singapore Sovereign Fund, are willing to step into this arena now, which has traditionally been largely corporate strategic investors, who have a play in the industry. But now we're seeing these two giants come in, and this is only going to be a good sign. And I expect many, many more investment firms like them start to do the same, either through partnership or solo, because I think they both made it very clear that a climate-focused investment strategy is going to be a winning one in the long term.
Right. And I think the question that in the conversation we've had offline is just, how much is enough ultimately to move the needle, right? So these sums look large, and they are large, and they are important, but the scale of the problem is also a lot bigger than other challenges we've faced, right?
Yeah, definitely. I mean, if $1 billion from BEV isn't enough, 600 million isn't going to do much either. But it gets things going. It gets the conversation started, and it hopefully opens up, more influx of capital from other sources.
Right. So with that, a good point to progress to, while there are some positive signs, I'd say, we definitely see positive momentum towards climate tech. There's reason for caution, and there's reason to really think deeply about this. And I think the most pointed advice I have is really, first, if you're going to put your money into climate tech, whether it's buying a stock or whether it's investing VC funds or doing an angel investment, you really, really need to dig into the feasibility of the technology. So that's one thing, is just, can this work? And you would be shocked how many things get funded without that question being answered adequately. And I'm all for ambition. I'm all for trying to solve, quote unquote, unsolvable problems. But we have to, we still have to obey, physics and chemistry in many of these cases. The second thing from my perspective, and just, we spend a lot of time interviewing startups, understanding their challenges, evaluating their path forward. And in particular, I think, the passion is easy to find from a founder in climate tech. They want to solve a big, difficult problem. They think they have the technology to do that. So putting aside, the fact that I just said the technology has to work, is this being realistic about the challenges from a scale and particularly a business development perspective. It's hard. These are your customers, or your potential customers, are very conservative. You think about utilities, you think about oil and gas, for example, two huge players that if this is going to happen, for better or worse, those two industries are going to be vital. Adopting something new, sure, there's policy and other things, but there's just, for any large corporation, really a barrier to switching to something new. And I think it's really valuable to have people who can navigate those kind of challenges with those kind of stakeholders, because they're getting pulled in every direction, not just wanting to solve climate change.
Yeah, for sure. And it's not even just the conservative aspect of the industries, right? It's trillions and trillions of dollars in sunk capital cost of infrastructure. You don't just snap your fingers and change things up, right? I think one of the great examples, like you mentioned, is that even when the technology works, even when you have one of the biggest players in the industry backing it, convincing the rest of the industry to adopt it is a whole nother challenge in itself. And I think we're seeing that all the time. And I think that's kind of key. I think that's a really important point.
Yeah. So another fun for some, maybe not for others, but an example we can dig into, which is really points to my first point of advice about really digging into the veracity of claims, is Nikola. And I know you spent some time here. This smells so similar to things we've seen before, but what's your take on the drama behind this and what it actually means?
I mean, the thing is, if you peeled back even maybe one or two layers of the onion, this thing stunk from the beginning. And I'm not saying that Lux had that foresight or predicted this was going to happen, but if you looked at foundationally what Nikola offered and what they were claiming to be able to do with their electric truck, which used to be a hydrogen truck, which also used to be a natural gas vehicle truck, it just changed so much over the years. They were very inconsistent, but they caught on at the right time. There was a huge burst of enthusiasm around pure play EV stocks and everything, and they took advantage of the SPAC craze. And look at that peak. I mean, it went from 10 to 70 in the span of a few weeks, but now we're back to 10 because you realize that they don't have a car. That's kind of what we've been saying all along, was just that you can sign as many orders as you want, you can sign as many supply deals as you want. My favorite one from our colleague Chris Robinson, who leads our mobility coverage, is you can launch a seventh vehicle, but if you haven't delivered the first six, is it really your seventh vehicle? And I think that's kind of, people get caught up in the craze and the hype and the FOMO, and people get burned. But that's not to say there were some smart people who cashed out at 70. But there's a lot of people who bought at 70, and probably, I hope they never cash out, because it's never going back up there again. But I think at the foundation of it is, there was no technology that worked, and if you saw that, it would have been very clear.
Yeah, and again, this has happened. How many times does this have to happen? I mean, Theranos, there's a movie on it. where there's essentially there's always going to be attempts to slip through and profit off of things that might be might lack substance, that just might not be there from a solution standpoint. And you can't bat 1,000 on them. You know, people are going to make mistakes, but you have to do your best to really dig in and ask the right questions, particularly something at this scale. And I think with that, that's a good note to wrap up and come back to where we started, which was 3 key questions. What is climate tech, hyperhope, and why now? So we'll take turns with this. But first, I'll field the what is climate tech, which you, I think, very eloquently described. It's really, you know, to move the needle here, it's really about focusing on eliminating emissions at the source. But you use the word patient capital, right? You got to be patient. It's going to take some time. These problems are hard to solve. And as I said before, adoption is not going to happen overnight for really all of these technologies. Hyperhope, what's your take?
Yeah, I'm a big fan of hype. Lots of hype. It can't be a bad thing. It brings more attention to the problem. It brings more attention and spotlight to the startups and the innovators who are doing good things. People will get burned. There will be failing startups with or without the hype. There will be failing startups anyways. So if we can get more discussion and conversation around the topic, it's great. And I think it's important. But for all of you out there, whether you're an investor or startup, you just have to navigate it. You have to ride the waves. There's going to be lots of up and downs, but yeah, hype is always good in my opinion.
Yeah, I think that's fair. And to wrap up, why now? And another way I guess I'd phrase this for myself is why I'm less skeptical than I used to be. And I was pretty skeptical. Why again? And I think you can really point to 2 things that happened in the news just in the past couple of weeks that really speak to a different, really global environment. And I don't mean the actual environment, but just the ecosystem and what's happening around us. One is the proxy fight at ExxonMobil. The fact that an activist investor, a relatively unknown one at that, could essentially move the board at a company like ExxonMobil in the interest of attacking more climate-related issues is extremely notable and fascinating. And there's a whole bunch of things to read about how that went down and what that means. But to me, that's a sign. And another one is another oil and gas company, and Shell, where a Dutch court actually, under a provision of the Dutch law, is ordering them to slash their emissions. So these are the kind of things that weren't happening 10 years ago, to put it bluntly. And for whatever reason, it takes time to generate momentum behind these things, but that is different now. And so that's why I take off my skeptic hat a little bit. I do remain skeptical about a lot of these technologies, but I think there is reason to be a little bit more positive about the potential here.
Yeah, absolutely. Skepticism is always good, and I think to your point is there's a different kind of playing field now from 10 years ago. When you have government siding with climate over business, or or against emitting businesses, it makes things a little different.
Yep. So with that, we'll wrap up the formal part of the webinar. So thank you everybody for joining, but we will be taking questions. So please type those questions into the questions box. I see a few coming in now. So the 2 of us will field a few of those before we wrap up everything. The first is right in your wheelhouse, which is, what are your thoughts on the hype around hydrogen? We didn't talk a lot about it, but it's making the rounds, and I know we're doing a lot of research there. So the question from the audience is, what's your thoughts around hydrogen?
I think it was pretty much a guarantee someone was going to ask about hydrogen. It's crazy. I've been covering this space for about 8 years now. I can't really remember the last time one single technology got so much attention. It's a funny story is We had a maintenance guy come and fix a dishwasher a few months ago, and he saw I had a slide on hydrogen up on the screen, and he started asking and talking to me about hydrogen, like because he's read so much about it. It's every average person wants to talk about hydrogen, and it's quite insane, to be honest, from a level of hype. But it's good. It's another potential solution to decarbonize. Many believe we'll move to a full-blown hydrogen economy, but there's still a lot of unanswered questions of how we're going to get there and when we're going to get there. But yeah, I think if you look at the SPAC craze and the climate tech investments, a lot of the recent big VC rounds and SPACs have been related to fuel cells and hydrogen companies as well. So they're getting caught up in everything as well.
Yeah, and we'll save the. I'm sure we're going to get a flurry of questions about batteries versus hydrogen because that question never dies. But we'll table that for a future conversation because I see some of those. We're going to have time for one more question, and the question is, based on our experience with our client base, do you see any hesitancy from investors, either corporate or private, to jump back into this space? Call it what you will, climate tech, clean tech, whatever. When some have had missteps in the past that they got burned by. And I'll speak a little bit to my experience, and I'm interested in your more recent experience. I will harken back to batteries, where essentially there's a trail of dead. And it's obviously a metaphor, but there were a lot of joint ventures aimed at producing an incredibly huge volume of batteries. You can look at Evonik had one, Johnson Controls and Saft. There's a laundry list of them. And that market consolidated, I would say, as we predicted, and there are a few players remaining. So in a space like that, you have to look at the maturity. So in that case, the value chain has matured quite a bit. Maybe a new technology will slip its way into the value chain, solid state batteries or something else. And that won't be easy, but it's possible. But I doubt you're going to see many large corporations, for example, launching a battery business. If you're in it, you're in it. That market is what it is. Smaller players are going to try and insert themselves. So I think there is definitely scars. When you talk to people in a corporate environment, they remember. And I think that does cause some hesitancy, even with the renewed momentum behind it. But you've had even more of these conversations than me. What has it been like from your perspective?
Yeah, I mean, I kind of agree with there are some scars, maybe for the few teams or business units that were directly involved, but I would almost say there's a lot more confidence now from the corporate investors. I would like to say that has to do with a lot of enthusiasm around climate tech and getting back into it. But I also think the other angle that, that's agnostic of industry is these corporates are a lot more mature now in how they innovate. They have a better understanding of how it's done compared to 10 years ago, right? You kind of brought up the examples is joint venture here, joint venture there, spin out a new business. I think we don't see that as much anymore, right? Now it's everyone knows where to dabble, how much to dabble, and eventually if things go well, bring it in house and then scale. So I think the maturity of innovation over the last 10 years is what's really going to be a good foundation now that these corporates are looking at the climate tech. So I think it's two really strong trends, positive momentums coming together that been really building up for a decade now. So I think that's kind of what we're seeing because the questions we get asked on a daily basis is hydrogen this, GHG emissions that, CO2 capture this. It's just lather, rinse, and repeat. It's always the same topics, and I think it speaks volumes to what these big players are thinking about.
Great.
Yeah.
So I think that's a good note to wrap up on. So thanks for your thoughts there. Thanks everybody for joining us. These conversations could go on and on. We're happy to chat with you more. Just reach out. But that concludes the webinar for today. The slide presentation and recording will be sent to all attendees via email later today. One favor for us is We do have a survey at the end of the webinar. We do take those seriously, and we use it to feedback in terms of the topics we pick, the formats we use, and things like that. So please do fill out the survey if you have a chance to. And otherwise, thanks for joining us, and we'll see you in a future webinar.